Prior to January 2011, D. Merton is a very profitable high-tech company with revenues of over $400 million. D. Merton's fortune had been boosted a few years earlier when it acquired the S1 technology behind a revolutionary radar system. TYSL Accountants will be the firm in charge of D. Merton's audit following the year 2010 to 2012. Following the launch of S1C, D. Merton's next generation S1D system promised to be a game changer and was just a few months away from release. However, prior to the launch of S1D, D. Merton faced a series of problems which hindered the process of the audit, ultimately delaying the launch of S1D to September. Among the problems of D. Merton includes coercion of employees, Chris Perry, head of IT in D. Merton, bribery of the new Genera officials to secure a tender by misappropriation of funds, and an overstatement in the forecast of the financial year profits. On the other hand, TYSL accountant Sarah Hancock also failed to declare documents confirming no existing relationship between Richard Dalton and Primetel's director out of empathy. So here with me is an employee from D. Merton. Can you tell me more about the CEO of D. Merton, Richard Dalton?
Rich Dalton, the CEO of D. Merton, is ultimately responsible for management and control of the company. Chris Perry, head of IT, is in charge of all technical issues, overseeing all technical operations. Zhang Keating, audit junior of TYSL accounting firm. Junior auditor mainly examine financial record and transaction to ensure compliance.
So what are the responsibilities of both D. Merton and TYSL accountants in relation to their professional relationship?
D. Merton's management is responsible for the financial statement and as well as provide auditors document for confirmation. TYSL accounting's responsibility is to ensure that the financial statement is present a true and fair view. The TYSL did not discharge their duty adequately. First, the junior auditor then made a note and confirmation of the report of Primetel without reviewing it with professional knowledge and due care. Joe, then senior audit manager, did not appropriately supervise and review work of inexperienced staff. Secondly, the audit partners Sarah and Patrick's independence is affected by the long-lasting relationship with the company. Being too understanding and nice in dealing with CEO, family connection with Primetel, closed the inquiry without asking the CEO to sign a red letter.
I'm now joined here with an employee from D. Merton. He works in the audit department. So can I ask you, how does the delay in the launch of S1D affect the company's finance and the year-end audit process?
As D. Merton had invested so much their money and time into the production of S1D system, thinking that it will be a game changer and profitable in the future, the company will be significantly affected by the cancellation of the product. With the lack of internal controls in place in the audit teams, they failed to carry out enough audit plannings. Misstatements were allowed to pass through the financial reporting systems, affecting the company's financial position and year-end audit plans. Moreover, payments will be made to suppliers which cannot be taken back. With the cancellation of S1D has been caused by D. Merton to lose their contracts with other companies who were waiting upon the arrival of the suppliers from there. As a result, most of them decided to cancel their contracts and use other products. Therefore, decreasing profits due to cancellation of S1D and also affecting the company's technology and reputation significantly, despite 3 previous successful systems. This delay has been caused by the rest of the D. Merton systems such as S1A, S1B and S1C to become updated, therefore affecting the company's going concern significantly as trust and loyalty has been lost as well as other systems has been updated. Due to the overuse of D. Merton's S1D system, D. Merton would then have to incorporate a new strategy to gain their consumers' trust back again, spending more on marketing which will cause them to increase their expenses.
I'm now joined with another employee from D. Merton. So may I ask you, to what extent was Demerton's sales activity in emerging markets overseas taken into account by TYSL accountants in regards to a fraud risk assessment focus?
TYSL accountants are responsible for obtaining reasonable assurance that the financial statements taken as a whole are free from material misstatements, whether triggered by fraud or error. TYSL accountants are responsible to detect and assess the possibilities of material misstatements of the financial statements due to fraud. They are required to obtain sufficient appropriate audit evidences regarding excess risk of material misstatement due to fraud through implementing appropriate responses. In addition, they have to respond appropriately to fraud or any question fraud recognized during the audit of the statements. TYSL accountants are also responsible for maintaining professional skepticism during the audit, recognizing that material misstatement could possibly arise due to fraud. This was demonstrated in the film when Sam raised her suspicions on Primatel to Sarah, who then questions Richard further for question and evidences as frauds were detected. To ensure that the entire team is conscious of the possibilities and their responsibilities for fraud and errors, ISA stated that a discussion to be carried out within the team. This has also been demonstrated in the video whereby an audit team meeting was held by Sarah to discuss on the fraud risk by Demerton.
Was Sarah Hancock justified in bringing in an industry expert for valuation purposes?
Sarah exercised her duty of care as Demerton audit partner to a certain extent. She did so because she took care of problems when they happened and also took all findings by her team member into consideration when they brought it up. Despite Patrick clearing the air with Richard about the issue on Primatel contracts and the family relations, Sarah did the right thing to interrogate Richard again to inquire information and explanations from him first hand for the purpose of the audit evidence. However, in contrary, she did not fully exercise her duty of care because she has failed to establish that the engagement was fulfilled in compliance with the required auditing standards and professional ethics before approving it. Moreover, Sarah and her team engaged in multiple ethical threats and control risks. Sarah was also not independent herself as she relied on Patrick's opinion and comments during the audit. A good example would be towards the end of the video when he cautioned Sarah for discussing with Liz her concerns and also removing the extra note in the management rep letter to rectify that there were no actual family relationships in Primatel when Patrick questioned Sarah's actions. Additionally, she failed to perform her duty as an audit partner again, and at the same time, her audit junior raised concerns about the engagement with Primatel. Sarah did not seem to be interested when Sam explained that there was a possibility of fraud when she found out that Demerton was still engaging with Primatel, when in fact their engagement was supposed to have ended the previous year. This could be due to Sam's position as an audit junior, that Sarah felt that she was inexperienced to discover such fraud. Furthermore, Joe, the audit senior partner, has also gone through the statements and did not find anything suspicious. She failed to preserve professional skepticism and vigilance to fraud and errors that could possibly arise. Sarah should learn to take in comments and trust her auditors.
I'm now joined with a TYSL accountant. So may I ask you, what audit plan would be in place in relation to ongoing overrun IT project?
Sufficient audit planning is essential to assist auditor in an effective audit. They allow auditors to identify and resolve specific or potential risks in a timely and organizing manner. They also allow auditors to delegate a suitable engagement team for an effective and efficient work. The first stage of an audit is planning. To have an effective stage of planning, TYSL accountants should review and have a basic understanding of Demerton's ongoing overrun IT project and its environment. Demerton's boards should have consulted TYSL accountants and made known to them that IT tests have revealed 50 serious flaws in the defense across all systems, including the company's design base, which carries the blueprints of Demerton's product. The auditors are obliged to know that Demertons have 4 separate IT systems running within the group through acquisition. This could mean potential flaw and risk in the internal control within the organization. Demerton should have also disclosed the options and choices that they were made to the auditor as a form of organization objectives and strategies. On the other hand, TYSL accountant auditors are also deemed as being reasonably knowledgeable in the specific industry sectors. They are also expected to be conversely updated in the economic conditions and technological factors. Given that the correct information regarding the ongoing IT projects were given to the auditors, the second stage of audit would be the interim phase. By gathering evidence and performing relevant tests of controls and doing substantive procedures, the auditors can identify and evaluate the following risks: whether it is a significant risk or material misstatement that requires special audit consideration. Auditors can perform follow-up audits procedure at the assertion level, which includes providing more supervision or emphasizing the needs to maintain professional skepticism. Sufficient and quality audit evidence can reduce the audit risk to an acceptably low level.
In conclusion, D. Merton ran 2 control risks and 2 inherent risks. Control risk is the risk of a material misstatement in the financial statements arising due to the absence or failure in the operation of relevant controls of the entity. Inherent risk is the risk of a material misstatement in the financial statements arising due to error or omission as a result of factors other than the failure of controls. D. Merton ran a control risk by overstating their revenue, even though their S1A product experienced a fall in sales. The auditors therefore asked D. Merton to produce a spreadsheet showing cash flow forecasts justifying the current value. D. Merton ran another control risk by stating that charitable donations made to supplier Primintel, although relationship with D. Merton ended last year. The amounts paid to Primintel were more than the previous year. Auditors tested the expenditure of D. Merton and discovered that they were still making payments to Primintel even though their relationship had ended last year. They found out while Richard's daughter brother-in-law is still one of the directors. D. Merton ran an inherent risk by overstating their revenue forecast from S1D sales. Many S1D pre-order sales were cancelled because 2 countries said that they would make their own systems. It was after some security investigation that D. Merton discovered their systems were copied via access to D. Merton's design database. Attackers gained access via a subsidiary's finance system. They then gained access to D. Merton's central finance system and they created their own login credentials. Those IDs allowed access across systems, including the design database and access to the blueprint for S1D. Auditors found out that their IT project was overspending a lot of the budget. Sam went to investigate some of the suppliers' websites and premises and found out they were bogus suppliers. Tom blackmailed Chris, the head of IT, to use a cybersecurity firm recommended to him. It was because of this cybersecurity firm's incompetence that this design was copied.